from the morning reading. The major averages inched higher this week, stretching the upper boundary of the trading range. The S&P 500 and New York Stock Exchange recorded new all-time highs on both Thursday and Friday. The Dow Jones came within 16 points of its record close. Several of the indices successfully tested the 50-day moving averages during the week, and the Philadelphia Semiconductor Index reclaimed its 50-day moving average for the first time since mid-April, confirming strength in technology shares. That bodes well for the broader market going forward. There was marked improvement this week in the internal breadth numbers on the market. The advanced decline line for both the New York Stock Exchange and the Nasdaq were positive, and new 52-week highs hit triple digits for the first time since mid-April. There are a few negative factors coming through that cloud the outlook. First, the negative divergence in the Dow Jones Transportation Index, which is off about 7.5% from its all-time high. Transportation stocks usually show strength in a healthy economy, and the weakness in transportation shares, especially trucking stocks, is a worry. The transportation stocks rallied about 1% on Friday and appear that they may have bottomed. Another positive is that the pullback in the Dow Jones Transportation Index has held support at its 50% retracement from the October 2014 low to the November 2014 record high, which is bullish if it continues to hold. Secondly is that the Russell 2000, which has had a good 2 weeks, ran into resistance at its 50-day moving average on Thursday and couldn't break above that area on Friday. However, it's likely that if the market muscles higher next week, that resistance area could be taken out, which would be bullish for the broader market. As the week ends, we're back where we've been several times in the last few months, but we're improving internal breadth numbers after leaving the market in better technical shape this time around. Investors are not going to be anxious to jump the gun and bid stocks higher as stocks remain slightly overvalued. But any sign that global economies can put together more than 1 month of improving data could lead to the major averages to chase the S&P 500 to record levels. Also, and I got another interesting statistic here for you. If you look at the pattern that we had on Friday, where the S&P gapped up, hit a new high, and then slid back on low volume, the last 15 times that has happened, 14 of the 15 times, the following week's candle was down. So that's a very high incident rate. Obviously, we're talking about 15 events, but this is a particular pattern that we are looking at. And when you have such a high percentage, 14 out of 15, that is a pretty significant statistic to keep in mind. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:37 a.m. Central Time, and I'm recording this in preparation for the market day of May the 18th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. If you take a look at some of our charts, you see a little bit about what we're talking about. Obviously, Thursday and Friday's activity was bullish. We did break out. We talked, of course, on Thursday how important this candle was, and yet it needed to have a true confirmation. And to say that this little old doji here is true confirmation would be quite a stretch. I mean, this is a higher close. It's a new record high close, and yet at the same time it did not have by any means the kind of volume and wide participation that you'd look for. Now, as the author of some of the material I shared from the morning reading with you indicated, we did have improving market breadth. That's important. So there are definitely positives here. Price rules all. This was a record all-time closing high, and yet at the same time, when you look at some of the other indices, here's your Russell. I mean, we're way off on the Russell. The Russell needs to dramatically improve if this is going to be a healthy market. When you look at the NASDAQ, it's better than the Russell, but it's still quite a ways back from the others. And then Dow Jones Industrial Index, this one is clearly right there at its highs. So you have the cousins, the S&P and the Dow Jones, at or through new all-time closing highs. And then you have the other two, which we normally look to for leadership in bullish markets, the NASDAQ and the Russell, significantly further back. And then, of course, as we shared, transportation continues to be a concern. So a lot of things kind of going on within the picture here. Let's go ahead and take a look at our overnight action. Little bit of weakness Sunday night into Monday morning, but really nothing to get all that excited about. The S&P futures were down about 2.5 points, or about 0.12. I mean, that's near scratch. Russell about 0.25%. NASDAQ about 0.18. Dow definitely at scratch. You have crude oil up about 0.78%. The euro down about 0.5%, as were bonds. And then gold up about 0.25%. In overseas action, mixed. Asia was down, with China down about 0.6 and Hong Kong down about 0.8. Japan was up about 0.8. Germany scratch, and United Kingdom scratch. So not a lot, especially if you look at as we roll into our own market. Europe pretty much scratch. Our own markets, just a little teeny bit of weakness, which could easily be evaporated by the time the market opens. In terms of macroeconomic reports for today, you got housing market index, and that's about it. So we do have one FOMC member speaking, and you just never know what that could do. Not actually, that says 2 a.m. They must have been overseas. That's an unusual time. So that would have already occurred. In terms of what's in front of us, just this housing market index. Tuesday, building permits. And that looks to be about it for the U.S. market. And in terms of our volatility conditions, look at this, a short-term VIX, 10.77. So it's certainly getting down there. And look at the IV percentiles, 12, 3, 15, 20. So all in the lower 1/5 quartiles. No standard deviation moves on Friday, though fairly normal action here. About 4 out of the last 10 trading sessions on the S&P have been a standard deviation move or larger. So this is, we would say this is normal. We would say this is certainly way below normal. So certainly our fear in this market is at year lows. In terms of our regular daily report, not a lot of changes since Friday. Remember, there were a lot of changes on Friday. Friday we had the IBD status pop up to confirmed uptrend, and that continues. GMI index is a solid 6 out of 6. The intermediate term market posture is bullish, and indeed all 4 indices are in good shape, with the S&P bullish, the Dow very bullish, NASDAQ bullish, and Russell weak bull. Again, we draw this distinction between the S&P and Dow. We think of these as cousins. They often move together. And then the NASDAQ and Russell, also cousins that often move together. Well, these two here, we look for them to dominate during strong bullish markets. This is your small cap growth, typically. This is your tech. They often will outperform the S&P during strong bull markets, and the fact that they're lagging by such a significant difference in so many different indicators is certainly something of a caution. Our overall hedge warning status is a 0 plus, which is normal with cautionary aspects. We have that pattern from Friday that I mentioned earlier, and certainly it wasn't a time Friday to just go load all up because you had a new uptrend confirmed and enter a whole bunch of all new positions. The suggestion is to scale in, and particularly if we get any weakness at the beginning of this week, you got to take a look. Is the Thursday and Friday action just a poke outside the range and then back falling into the range and we've really accomplished nothing? Or do we have a little bit of a pullback which then becomes a stage for a real surge and next leg up? So you're going to have to watch for signs on that, and certainly that's something we will be doing. The daily squeeze is still present on the VIX, so that certainly could explode in volatility at any time. We do have a ratio warning that has fired, and the skew is now over 125. So that is also a warning that things could become more dangerous below. In terms of our risk aversion indicators, we have 2 that have fired as risk off now, so that still is in play. Another thing is that here we had a record all-time closing high, and yet new highs on the New York Stock Exchange were 220. So this isn't something to get terribly excited about. In terms of individual opinions, we are in confirmed uptrend. The VIX is inside the acceptable window. Option income strategies are fine. Just make sure that your strategy selection considers the potential for increasing volatility. Covered calls, you are absolutely okay for that in this current market environment, but bullish, calling for a 1-to-1 distribution between in the money and out of the money strikes. I would suggest you look for just the strongest patterns, the best of the best covered call strategies on initiating new positions. Easier to simply roll current positions, but if we do get that real breakout and we start legging up, these covered calls could certainly be part of the portfolio mix. Put selling, absolutely acceptable for new core put portfolio positions, but consider scaling in, using defined risk, credit spreads perhaps instead of just outright naked puts until we see that this is starting to really take hold. In terms of a relative rotation graph, another reason to be concerned, we continue to just see so little real strength in some of these important sectors. When you look at what supposedly is up on top, the internet, the banking, telecom, these are patterns that are, they're tailing the wrong direction. And then the second tier, which had been some of the strongest stuff, semiconductors, etc., they're also they've tailed all the way out of that upper right hand quadrant into the lower right hand quadrant. So in terms of what this relative rotation graph tells us, nothing here to get terribly excited about that you've got to hurry out and load up on positions. Sector market posture, obviously a lot more green here, no red, so that certainly is notable after our activity from Thursday and Friday. So things do seem to be firming up and becoming broader as we shared from the morning reading. Sector percent change, green across the board, with energy just barely scratched, but every other sector was nicely up for the day, so that certainly was helpful. In terms of the shadow trader industry group rankings, retail, internet, healthcare, biotech, railroads were all in the top. Now it's kind of interesting. Shadow Trader actually ranks the transportation index as number 6. It is what it is. That is certainly the rank that Shadow Trader gives this. At the same time, we would certainly look at that chart and say that it's 7.5% off its all-time highs. At the same time, the S&P is at a high close. So that would seem to be, frankly, to us, a bit of a divergence. But by Shadow Trader's opinion, that would also be an industry group to watch for potential strength. So that's kind of a mixed signal there as far as I'm concerned. That should be enough for today. If you find this helpful, we greatly appreciate you liking us on YouTube. Obviously, more information about what we do is available at this website. Performance matters. We're very transparent with all of our entries and modeled trades, our risk management, our profit management as we go along all the way to the close of the trade. And we have closed now. Actually, I need to update this, but as of the Friday close, we are now up over $50,000 worth of closed P&L for the year to date this year in our portfolio and options chat room closed trades. So that certainly was a nice little milestone there. So 5+ months into the year. Disclaimers as always, hit the pause button if you need more time to review. And we greatly appreciate you each and every day in the Falcon Global Trading community.